Very good morning to you. In business news at this hour, we highlight on the amendments that have been proposed to listing requirements on the JSE, and this as the market consultation process has shown favorable support to the requirements, which include debt listing. As a result, the JSE is said to be prioritizing a number of these amendments, including dual class shares, free float assessment and financial reporting disclosures. Issuer Regulation Director at the JSE, Andre Visser, speaks to us about these developments. Thank you so much for your time, Andre. We understand that the market has been favorable towards these adjustments, and the JSE is going to look at a phased-in rollout of these listing amendments. Just talk us through really what the feedback is that you've received.
Morning, Tumisang, and thank you for the opportunity. Yes, in May this year, we decided to issue a consultation paper to the markets. I think we wanted to take into account some of the very important initiatives that we were busy with internally, but also the very significant developments that has been taking place internationally, where markets like the UK, the EU issued documents to propose certain reforms to their listings framework. And we decided it was appropriate, given the unique circumstances that we were faced with, to issue a similar type of process. And that document was issued in May. We put forward a number of significant proposals to our listings framework, and it's very good to report that we had overwhelming support for all those proposals. And as you mentioned, we've decided to have, if we wanted to have meaningful impact on these changes, then we had to adopt a phased approach so that we can give benefit to both issuers and investors, so that we can attract new listings, we can deal with some of the delisting trends that we've seen in recent times, but also provide a framework that's safe and appropriate for investors.
Given what you mentioned on the delisting trend that we have been seeing over the past couple of years, to what extent is it that, the climate dictated that the JSE adjust its listing requirements, particularly on the side of transparency and fairness in this regard?
Tumisang, that's a very important question. I think we need to preface that with what's happening globally. I think any exchange will always be impacted by macroeconomic factors. And I think in an environment where we've got low GDP growth, I think you're always going to see a lower number of new listings coming to market and seeing more companies going private and delisting off the exchange. So many of these factors are outside of the control of the exchange as a listings authority. But I think very importantly, the matters that are within our control, I think it's important that we are responsive to that we make the appropriate changes so that we can attract new listings and try and stem the delisting style.
And of course, Andre, one of the major issues has really been about the debt listing requirements and what is then, needed and required from a company in terms of disclosure. How much of these requirements and the amendments are going to change the landscape that we have known for quite a long time now?
Tumisang, I think it's fair to say that the JSE has always had a very robust equity listings framework. What we did way back in 2019 is we proposed significant reforms to the debt listings framework. And I think that was aimed at far more transparency in the debt market, more corporate governance, and better protection for investors. So that entire process was finalized at the end of 2019. We had significant engagements with both issuers and investors because both of them at times have different needs and requirements, and we had to strike an appropriate balance. The set of changes we are proposing now as part of this consultation process is aimed at tidying up some of those proposals that we've put in place. I think it's fair to say that with any set of changes, there's always a bit of bedding down of the detail, and we're now simply updating that to make it more efficient and effective for both issuers and investors.
With regards to the pace and phase at which the process is in currently, it is noted that there's going to be a rollout phase that is going to be intermittent. Talk to us really about the pace that particular leg of the transformation is going to take.
Yeah, Tumisang, I think if you look at our response paper that we published in August, we were very clear that we had to adopt an agile approach if we wanted to have a meaningful impact and provide real regulatory relief to investors, to issuers, and also to provide some protection for investors. And that's why this announcement that we published last week, Thursday, is the first step in that phase. If you look at what we're planning for 2023, there would be significant regulatory reforms coming through in 2023, where we are rolling out the remainder of those initiatives. And there's some very important and impactful initiatives that we're proposing there. Issues like market segmentation, where we are aiming to give regulatory relief for some of the smaller companies on the main board. That's typically where we've seen companies suffer from a cost perspective. During COVID specifically, those companies took significant impact on issues like that. So we want to give real relief to those companies. So that will be rolled out in 2023. We also want to expand our secondary listings framework, where we want to make it much more attractive for foreign companies to come and list on the JSE. We want to make it easier for them to come and list on the JSE. And then also expanding asset classes that we offer to investors by expanding our REIT framework, which at the moment is only available in the property space, to also roll that out to asset classes like infrastructure, as an example. But many of those initiatives will require significant research and collaboration between local authorities like the National Treasury, the tax authorities, and also FSCA.
It's going to be interesting times, and I'm interested also in finding out how aggressive it is that the JSE is approaching getting new listings, particularly on the alternative from the companies that are abroad to list on the domestic stock exchange, particularly to fill that gap of companies that have since delisted.
Yeah, Tumisang, if you look at the document we published at the end of 2021, early 2021, the document that was aimed at effective and efficient regulation, cutting red tape, that process was aimed specifically at some of our smaller companies to give them some immediate regulatory relief. So I think if you look at what we've done with that, coupled with making our listings framework more competitive from an investor perspective, both locally and internationally, we think that when the macroeconomic circumstances change and we start seeing an uptick in GDP growth, that our framework will be fit for purpose and we'll be in the right position to attract those companies and investors to get back into our market.
We wish you all the best, and thank you for giving us those insights. That's the JSE's Andre Visser talking to us about those proposed amendments to the listing requirements on the JSE. We move on now to global market development.